covered essentially what happened in the markets, but what about the wider macroeconomic damage that we're likely to see to businesses, to jobs, to livelihoods? Let's explore all of that. Reginald Kadzutu is an economist at Zamara. It's an asset management company based in the Kenyan capital. He's with me in studio right now. Thank you for your time.
Yes, man.
Okay, so the NSE trading holds today. We're down over 15% in about 12 weeks. But is this just a COVID-19 sell-off, or is there a more fundamental problem with the Kenyan market?
I think in the next couple of weeks, everything will be blamed on COVID. But if you notice, the Nairobi Stock Exchange has been on a downward trend most part of this year.
And most of last year as well.
Most of last year. It only went up last year in Q4 after the interest rate cap had come off, misconceptions in the market that banks are miraculously going to lend money in that last quarter and make a profit. And you know the transmission mechanism of even them lending out the money takes longer. So most people went into banking stocks, created that artificial demand, pushed banking stocks higher. Whenever someone is buying a stock, someone is selling, and the people that were selling were foreigners who were getting out of most of the tradable stocks in the country.
So for them it was a profit-taking opportunity.
Profit-taking and getting an exit out of the market. So if you look at the market now, KCB released their results. Their revenue is pretty much flat. If you don't include net bank revenue on them, the revenue might have actually dropped. So the reality of yes, we're getting into the reporting season where we should see most activity on the stocks. People are realizing that dividends are going to be flat. Most banking stocks are not going to record any double-digit growth. So what they went into, the conception of we're going to get a return when they announce results has all evaporated away. So people are literally just rebalancing their portfolios and moving on to other asset classes.
So then how, assuming that at least the next 6 to 9 months are going to be pretty bleak, because the fact of the matter is the macro picture doesn't look particularly rosy. We've got the worst desert locust invasion in 7 decades, as it were. Incomes are likely to get a beating from this COVID-19 business. So consumer spending is definitely going to suffer. Insurance companies, of course, also exposed to the healthcare costs involved in dealing with this. Is there a way of trading this market route?
I think this point in time, you don't actually need traders, you need investors. When the market is going down, and the way it has gone down, and then it is historically down, the main question here right now is an issue of timing. When do I get into the market? And you're getting into the market for a long term.
For example, is there value, at least speaking broadly speaking, because the bulk of trading is usually just Safaricom or a handful of banking stocks. But beyond those guys, is there really any place to park your money?
You'll actually be shocked. For example, I'll give you an example of Unga.
Yeah.
Unga is pretty much as good as a monopoly as Kenya Power. People use Unga products. People have to eat at the end of the day. COVID or no COVID, people still need to eat. So when people buy stocks, my advice is always buy the company, buy the growth trajectory in that industry. So that's why Safaricom remains a darling, because they are pretty much profitable. Everyone will continue using airtime, and there's no competition that seems like it's
M-Pesa as well.
Exactly, and there's no competition that seems like it's going to come anytime soon. So they will remain a good growth stock. But will it make you money in a month, 2 months? No. For example, the guys who bought Safaricom at 2 shillings 50 cents 9 years ago or 8 years ago, we're smiling all the way to the bank. That's 1,000% return. Where are you going to get that anyway? But patience paid. So anyone who's getting into the market now, which will be the best time to get into the market, is look for the right stock in the right industry, definitely with the right management, because we have Kenya Power, which is supposed to be a monopoly, but has useless management and all corruption and stuff like that. So yeah, it's not looking good for the NSE. If what happened today happens again on Monday and Tuesday, we might actually break the 2,000 mark, which will be catastrophic.
Which would be rather interesting, because that takes us all the way back to the early 2002 levels.
Exactly.
So the macro side of it is also particularly interesting, because this is definitely going to have, the COVID-19 outbreak that is, this will definitely have an impact on people's ability to work. It'll have an impact on their earning power. It'll have an impact on company revenues. It looks like a prime opportunity for some kind of stimulus. What would you propose?
Unfortunately, the government is caught in a very hard place. Personally, themselves are broke. They've not been meeting their tax revenues. They have debt payments which are still coming due. do they actually have capacity for a stimulus? I doubt they actually do, unless they print money. They have been printing anyway, but unless they print money, even the
Why not
printing,
do it through a tax cut?
it's difficult. Like August is coming, and they have to pay back the interest payment for Eurobond. Their treasury bills and bonds, the majority of them are maturing sometime this year and early next year. A tax cut will just hit the only source of revenue that they have to actually repay this debt.
But the flip side of that argument is the fact that you're looking at lower growth, low investments, lower spending. Why not just give people essentially more money to spend in their pocket?
But they have been doing that, or they have been trying to do that, using the central bank. Because when the central bank buys dollars, from government goes, borrows on the Eurobond market, gets the dollars, central bank buys those dollars. Our reserves are not kept in shillings. Our reserves are kept in foreign currency. So whenever central bank buys dollars, just generally just printing money. And they've been doing that for the last 1 year, 2 years. We've not seen that impact in the economy. The money has not trickled down to where it is supposed to go. Because we need to understand the structure of the Kenyan economy, or structure of the Kenyan financial aspect side of it. If you look at the demographics, if you look at the difference between the formal and the informal sector, so you find you're giving a tax cut, and that will only affect 2 million people out of 47, because they're the ones that were actually employed. And if you look at the employment numbers, only 79,000 people earn over 100K, over 100,000 shillings. The majority of people actually earn less than 50,000 shillings.
So for them, a tax cut won't actually be beneficial.
It won't actually help them in any way. So right now, the government is in a place where tax cut, MPC meets, cuts the rate, will literally have no impact on the economy. I think what the government needs to put all their energy in is make sure that this thing does not become a pandemic inside the country. Stop it from spreading.
Okay, we'll have to leave it there for the time being. Reginald Kadzutu from Zamara, thank you very much.